You are watching this XM versus IC markets comparison because you want to know where trading is actually cheaper. The truth is, if you choose the wrong account today, you might be giving away 30% of your profits to the broker through hidden fees and slippage. In today's XM versus IC markets comparison, we are going to skip the flashy advertisements. Instead, we will uncover the harsh reality about trading costs and withdrawal systems that many review sites intentionally hide from you. I will directly break down 3 vital factors that determine your long-term success. These are the actual spread costs, the execution speed, and the absolute truth about deposits and withdrawals. By the end of this video, you will know exactly which broker truly deserves your hard-earned money. Let us start with the absolute core of your trading cost analysis. Many traders obsess over regulatory licenses, and while both of these brokers are heavily regulated by top-tier authorities, what actually protects your account balance day to day is how they structure their fees. We need to compare the standard and ultra-low accounts of XM against the raw spread account of IC markets. When you look at the raw spread account, you are usually promised spreads that hover close to zero. However, you must always watch out for hidden commissions when comparing different brokers. IC Markets operates with an ECN-style pricing model. This means they offer you spreads directly from their liquidity providers. Because the spread is so tight, IC Markets charges a fixed commission per lot on their raw spread account. This commission structure is very transparent and easy to calculate before you even enter a trade. XM, on the other hand, offers account types with absolutely no commission at all. They build their profit entirely into the spread itself. This might sound great for beginners who do not want to do the math on commission charges. However, we need to see how this actually plays out in real market conditions. A zero commission account means the spread will naturally be wider than a raw account. If you are taking multiple trades a day, those slightly wider spreads can add up to a massive amount of hidden costs over a month. This brings us to the most critical part of this review. Let us talk about slippage during news events and the Mount 4 and Mount 5 execution speed. During major economic releases like the non-farm payrolls or CPI data, spreads widen significantly across the entire Forex market. Liquidity dries up and the price jumps rapidly. I have tested both platforms during these periods of high volatility. Looking at the actual data, IC Markets maintains incredibly tight spreads even during these chaotic market moments. This is a massive advantage if you are a scalper or a news trader. Their servers are located in major financial hubs, meaning their execution speed is lightning fast. When you click buy or sell, your orders get filled exactly where you want them with minimal delay. XM also offers excellent execution, and they have a strict no requotes policy. This means your order will always be executed at the next available market price. However, because they do not charge a commission, their spread widening during major news events is slightly more noticeable than IC Markets. If your stop loss is tight, this sudden widening could potentially knock you out of a trade prematurely. Despite this, XM completely dominates the market when it comes to capital leverage through their promotional structures. Looking at these margins, we have a very clear conclusion for your trading strategy. If you are a scalper who needs ultra-fast execution and trading costs that are practically zero, then IC market spreads from 0.0 pips is the most optimal choice. On the other hand, if you are a swing trader, or you need high leverage and extra capital support to hold positions overnight, XM has an overwhelming advantage. Currently, if you use the XM partner code XP6GC, you will get a 50% deposit bonus up to $200. After that, you will receive an additional 20% for subsequent deposits up to $5,000. The registration links for both exchanges are right below in the video description. Or simply you just need to click on the link I left in the description section, and the system will automatically activate these exact offers for your new account. Using these official links also ensures you are registering on the correct, secure portals and avoiding fake websites. Now, let us address the elephant in the room that everyone wants to know about. We absolutely have to talk about liquidity and Forex broker withdrawal issues. There are always rumors online about brokers freezing accounts, manipulating trades, or delaying large withdrawals. It is completely natural to be worried about getting your money out of a trading platform. To be completely objective, neither of these platforms is 100% flawless. For instance, the account management dashboard of XM can sometimes feel a bit cluttered and overwhelming for a completely new user. It takes a little bit of time to figure out exactly where all the tools and settings are located. As for IC markets, while their trading conditions are premium, their customer support can sometimes be slow to respond during peak market hours. If you have an urgent issue while the New York session is opening, you might find yourself waiting in a queue. However, regarding the ultimate safety of your funds, both of these brokers process withdrawals extremely reliably. I have personally processed multiple withdrawals from both platforms over the years. The money consistently arrives in my bank account without any suspicious delays or unnecessary hurdles. You just need to understand that they both process funds back to the original source of deposit. If you deposit via a Visa card, your profits up to the deposit amount must go back to that exact same card. This is not the broker trying to hold your money hostage. This procedure complies strictly with international anti-money laundering regulations. As long as you fully verify your identity and use bank accounts in your own name, you will not face withdrawal issues with either XM or IC markets. In summary, choosing between XM and IC markets comes down to matching the broker to your exact trading personality. There's no single best broker for everyone in the world. Choose IC markets if you prioritize the absolute lowest spreads for high-frequency trading and scalping. Their raw spread account will save you a fortune in hidden costs over the long run. Choose XM if you want to maximize your trading capital using their generous deposit bonuses and prefer a simplified zero-commission structure. XM is fantastic if you want to test the markets with a smaller initial deposit but trade with larger leverage. The exact, official links to open an account and claim the highest bonuses from both brokers are pinned right at the top of the description. Thank you so much for watching this deep dive comparison today. I will see you in that next video to continue building your trading edge. Disclaimer: leverage trading, Forex, and CFDs carry a very high level of risk and can result in the loss of your capital. All information, analysis, and comparisons shared in this video are for educational purposes only. This content is based entirely on personal experience. This is absolutely not investment advice. You are entirely responsible for all of your financial decisions.